Hi guys, welcome back to another episode of the Forex Market Breakdowns. This is episode 35, and to start off we'll look at fundamentals, what is affecting markets first of all. So the biggest risk we currently have is coronavirus. Cases in China have topped 70,000. Number of deaths around 1800 or 1850, and that is a big risk in the market. So to look at how the risk is reflected, companies like Apple, HSBC have warned that they may not be able to meet the expected revenues for 2020, not just for the first quarter, but for 2020. The impact of the virus for the first quarter is likely to seep off to the whole year, and that is likely to affect markets big time. So we're going to look at charts, and I'm going to look at precise assets which are likely to do well as the virus gets bigger and as the pandemic kills more people and spreads to other nations. Then I look at assets which are likely to fall. So to be precise, I'll be looking at gold. I think gold currently is a one-way bet. It can only go one way, and that way is up, and other pairs can go downwards. So again, we'll talk about what governments are doing. So if you look at the People's Bank of China has cut rates now 2 times, and I think Singapore also cut rates and stimulated the economy. So what basically that means is they are trying to bring back growth to the economy by providing more easy money. They're trying to provide easy money to the economy such that you can kick back growth. So some of these things you get to learn them when you attend our course, when you learn about business cycles and the role of the government in business cycles and how governments control business cycles. What we don't know is the effect of the easy money on the economy. So to be precise, for example, if they provide too much liquidity in the market and the pandemic is well contained, then it may lead to them tightening again. And when they tighten, what happens is markets are going to have to go down. You cannot discount earnings without knocking off markets. That one has always worked that way. So if you look at, for example, Shanghai Composite, which is the the main index in China, yesterday it was up 2.28% after the People's Bank of China cut rates. If you look at the S&P, which never opened yesterday, last week it closed at new highs. So we are waiting for this week to see. But currently today, Asian stocks went down after some companies warned that they may not be hitting their targets. So that's precisely what's going on in the global picture. We don't look at all assets, we don't trade all assets for now, but we try and understand what is going on in all these assets, because we are currency traders, and currency trading is basically about macro, because we trade global currencies. So we want to understand what's happening in Australia, what's happening in China, Asia, USA, and other things. Then we look at commodities. So I'll start off by going directly to look at commodities, and then I look at dollar index and probably one more pair cable. Then Caleb will come in and look at his pairs, and that will be it for today. I'll also try and review some of the pairs I did last time, like gold. I did Euro Yen, and I think I did DXY. So I'll try and look at them as I'm analyzing this time, what I said last time, and what happened. Then we'll think about what is going to happen, and then come next week we shall do the same. So hopefully you learn a thing or two. The essence of these things is not for you to copy what you are doing, it is for you to learn. So let's go straight to the charts.
If you want to learn about how we analyze the market here at Financial Hub, both geopolitically and technically, we are having our Forex Masterclass next month from the 11th to the 13th. So avail yourself. You can check more detail on our website, or you can give us a call. We are having few seats left so far. We have a couple of students who have booked the class. So come fast, come all, and let us learn how to trade the market. The location is here at ICA building at our offices on the 17th floor. So make your booking appointment. You can come see us and book your seat, or you can give us a call at any time.
So to start off the analysis this week, I'll look at gold, and I'll start off from the weekly chart. So last week when I was doing the analysis, I said as long as gold is trading above 1550, I will be bullish to at least 1610, 1625, and ultimately 1650, where I have marked 5. So it looks like the market is playing out as I expected, and we are going higher. So on the weekly chart, you can see last week we had this close, which suggests that we could be going higher. And if I go down to the daily chart to get the first target that I'm looking for on the way up, it is 1610, around 1610. So if we plot the fib from here, from the bounce, which was around 78.6, So if you plot the fib there, you get we bounced off at the 78.6 and markets are moving higher. So we're looking for R1 first, 1610, 1625, and ultimately 1650 R3. So we might get a move all the way to R2 first, a correction to R1, then a continuation to R3. That's what I expect will be playing out on this commodity, especially since coronavirus is still a big threat to markets. So on the 4 hour, there's nothing that I can show you there unless the execution points, and I think I already executed this trade. So yeah, so I came in yesterday early in the morning in the office and I executed this trade at around 1579, 1580. You can see, yeah, we expect the markets to move higher at least to 1600, 1610 like I've said, and ultimately 1650. So gold for me is a one-way bet unless we get a break below this trend line, which has a very low probability of happening. Very low probability of happening. I will still be bullish. I will still expect markets to move higher unless we get a very big change in fundamentals, which I don't see coming anyway. So that's what I expect on gold, a one-way bet. We're moving higher, 1600, 1610, 1625, and ultimately 1650. So I'll do the next pair that I'm doing, dollar index. So the next index that I'll be looking at is the dollar index. Last week I also looked at this index and I said I probably expect a move higher to $100 mark. This week nothing has changed. My outlook is still the same. I expect a minor correction to probably come in from the daily chart, which I'll show you. But for now on the weekly chart, you can see precisely we're moving higher to form new highs. So probably 100, 100.2, 100.5 is the next level that I'm looking for. And if you combine fundamentals with what is happening technically, you find that the dollar is likely to keep on moving higher. The US economy is currently doing well and they don't have many risks. As much as coronavirus is hurting China, the US has not been hurt by the coronavirus, especially since they don't have any cases. Their sales are slowing down, but not compared to other countries. So that means if you compare the dollar to other indexes, we're likely to get a stronger dollar, not because they're doing so well, but because the other countries are so weak. So that would be the reason for this market moving higher. I, however, expect a correction from this point, 99.2, we can get a correction to 98.5. There's some high probability of that happening, at least 60-65%. And after this correction, now we can get a move higher to touch 100. So if I'm going long, I'd wait at least for this correction. Coming in long at this point is quite risky. That's not really smart trading. That's probably gambling. So the probabilities are we'll have a slow move. We'll have a correction back to R2 and a touch of this trend line before we get the move higher. So executing a long trade at this point will be a perfect idea, but at this point I think that one is not a very good move in the markets. So that's what I have on dollar index. Very clear trades. I don't have much to say. I'm not really confused like other times when I look at markets and you have 3 or 4, 5 scenarios. For these markets this week, I expect certain things to play out and I'm quite confident they'll play out as I expect. So yeah, you can see on the forward chart we're already having some shooting stars, and we could get a move to P first and then S1, finally probably S2, but all the way to S2 that's quite ambitious. So you can first look for P, S1 and S2, or you can just wait for the correction and then execute the long trade. That for me would be a better bet than looking for this short, since I'd rather stay with the trend than going against the trend. So that's my outlook on dollar index, and I'll now look at cable, then I'll be done for this week. So the next pair that I look at is cable, GBPUSD, a very good pair, a fast moving pair. So towards the end of 2019, last year, we got some signs that Brexit would happen, and it will happen in a good way, not hurting either the European economy or the Britain economy. So from that point onwards, the pound bottomed at the 1.2 mark, and you can see we had some bullish momentum all the way to the 1.35 mark in the last quarter of 2019. In December, we touched 1.35 and we had a correction all the way to P. So currently we are trading at P. Last week we tried moving below P, but you can see we had this candle suggesting that perhaps P is becoming a strong level to be broken. But if you go down to the lower time frames, I think you get a different perspective. So on the daily time frame, you can see clearly we had some consolidation pretty much after the long move all the way higher. So from October, we had some consolidation from 1.2750. We went higher, capped 1.35, came back lower, and we've been sitting on this consolidation, which has some patterns in them. So the consolidation was really good. You could trade it and make some money. So on the consolidation, you can see we had higher highs and higher lows. So we had higher highs, higher lows. But when you go to this point, we had lower highs and higher highs. So that means we were forming sort of a triangle. Finally, we had a breakout. Then this was the breakout, and we had a move back up to retest the broken trend line. And yesterday we had a very good 3-pin pattern formation, suggesting that we could be going lower. So I'm looking for a short trade at least to S3 first. If we get to S3, then I'll look for 1.2750, which is my next major level on this currency pair. So that's my outlook on pound. A break past this previous lower high, could nullify the idea, but the chances of that happening quite slim again, quite slim. So I'm dealing with probabilities this time. I'm dealing with probabilities as always, but this time the chances are high that what I'm talking about will probably happen. So I expect pound to keep on moving lower, especially if we get a close above P towards London session. So we are currently 30 minutes before London session. If London opens and we get a close below P, and that's a good sign, and I'd look for S3, which is the next lower level, 1.28, 1.2750, as I said earlier. So if you look at the risk reward tool, there's a good amount of pips to be made from executing that trade lower. So if you look at, if you place it here and you drop it all the way to there, so around 195, 200 points for 67 or 70 if you bring your stop loss above that point. So we get about 1:2, which is not a bad risk reward ratio for that trade. So that's my outlook on pound, and I think I'm done for this week.
Hey guys, so I won't say much. Let's just dive into the markets and see technically what is happening. So yeah guys, now we're down to Aussie dollar, one of my favorite pairs because it follows patterns, though it doesn't have as many pips as GU, GA, GJ, EA. It's quite has a bit less pips on average per day. So looking at the weekly chart, we're still in the same weekly channel we've been having for the past few weeks. If we go down to the daily chart, I have three projections that I'm looking towards as the market is falling. So if I had that, so sort of we're in this sort of downward triangle, and I'm targeting the market to move further down. I covered this in the article yesterday, and I said I'm favoring more of the downward movement and targeting new decade lows that we haven't seen for the past 9 years, since 2009. So if we break below 0.6675, we'll be heading lower to new decade lows, and that's what I'm really expecting. So one of my targets is that if I return the lines I have, just a projection, so around this level. So I have that another significant target which might be touched. So this is the same line as this previous lower high, another lower low, and a further lower low further down. If you go to the 4-hour chart just to look at it more clearly, we sort of have that formation. And I remember I covered this on the article yesterday. We sort of have that Elliott wave formation, 1, 2, 3, 4, 5. We've currently just finished the fourth wave at with a symmetric triangle, and the market just broke. It just popped out of the triangle yesterday, and now we are heading further low. So I'm expecting new lower lows, lower than the previous low, which was 0.6660. So heading lower to about targeting 0.6630 and below that. So that's mainly what I have on Aussie dollar. I did a nice article yesterday, so for those who haven't, you can head to our website, which I'll leave a link below, and you can go get more information on that. So I won't cover much on that. The upside is still a potential move, which I will cover up on the website later on, but for now I'm following this move and see if it move further lower. So that's basically what I have, and we can go down to USD-CAD. Yeah guys, so now we're down to USD-CAD. Looking at it, still same, following the Elliott wave pattern formation, which we teach in our packages here at Financial Hub. So if you're interested in more, you can come and learn how to trade the Elliott waves, but that's a story for another day, not for now. So looking at it, we sort of have that 1, 2, 3, 4, 5 formation currently on the fourth wave. And as I covered last week, we sort of had that formation where we said we might have that break of the trend line, a retest, and maybe a further move up from our current position. But first we might get that further upward movement. But before that, we might get a sort of consolidation or a further move down, maybe to touch our 38 point our 38.2 Fibonacci level. And if we go down to the 4-hour chart, that was the daily chart, we sort of get that formation. So something we learn under, which we teach under Elliott wave, is called alternation. So on our second wave we had alternation, and the fourth wave currently I'm expecting a faster and deeper dip, unlike the second wave, which we had a sort of consolidation movement to the side. So I'm currently targeting, if you can see, I sort of have this temporal blue lines, which are basically my support and resistance lines for the short term, and they're just previous resistance and support levels, which I'm targeting in line with the C level where the trend line currently is, if you can see that. So I'm still expecting a further move down, but currently where we are, the market can shoot further up. Last week I covered, remember I said I'm on a short position. I'm still on the short position. I'm managing it well. Currently it's a risk free. I've broken even on the trade, so I'm looking to see how market will act, especially now since the market is 20 minutes to the open, the London Open. We're yet to see how the first hour the market will react and the candlesticks that will form at that current moment. So if we have that further move down, maybe within this channel we might get another push down and start watching for where the market can change direction, because we can see there's a slowdown in momentum to the downside. We started off well since we touched 1.3325 level. We had a beautiful 3-pin pattern at the top there, if you can see around here, and the market dropped beautifully and very fast ever since. But currently we've had that sort of slowdown in momentum to our target. So keep an big eye on this. I'm still watching, but there's a lot of move coming which can go to the upside. So that's currently what I have on USDCAD. I'll follow up on the group later on in the week. If you want to learn about how we analyze the market here at Financial Hub, both geopolitically and technically, we are having our Forex Masterclass next month from the 11th to the 13th. So avail yourself. You can check more detail on our website, or you can give us a call. We are having few seats left. So far we have a couple of students who have booked the class. So come fast, come all, and let us learn how to trade the market. The location is here at ICA building at our offices on the 17th floor. So make your booking appointment. You can come see us and book your seat, or you can give us a call at any time.